Good morning, Remisiers and clients. Thank you for attending our usual Monday morning call webinar. Today we'll be talking about Lantrovision in detail, and as well as giving an update on the Thai macro situation, land transport, sets, and global logistics properties. Our usual disclaimer. Okay, for Thailand, we're maintaining our underweight call. Global markets were generally muted to the announcement of the coup. The Thai economy is already tipped to go into recession in the first quarter of this year and probably continue its recessionary trend for the second quarter of this year as well. It's not had a functioning parliament since the end of the year, and that is going to remain a drag on the economy. If the stalemate is set to continue, there will be no budget for the coming fiscal year. However, they announced over the weekend quite strongly that they intend that the budget will be finalized, as well as they wish to pay all the farmers who are owed money for the rice subsidy. They wish to close these two issues so that the economy can get ahead. Now, although that in itself is probably an encouraging bit of news, that the economy is the top priority, we do wish to point out that there is growing opposition to the military's coup, especially from the red shirts, and political risk remains that that could grow into something dangerous, right? Because previously, if you have red versus yellow, now you might have red versus the military, and that could be a explosive affair. Of course, it's hard to predict, but on that note, we seek to maintain the underweight just to err on the side of caution. That said, exports could lend some support to the economy as Thai baht weakens and the global economy is improving. The central bank still has some room to cut interest rates, and like we mentioned, the military is putting a priority on getting the fiscal affairs in order. But we still maintain our underweight as we're cautious, given that the political situation could explode again. Move you on to Richard, who will talk about the updates on the land transport.
Hi, good morning. This is Richard. Okay, I'll speak a little while on the new bus model. So last week, LTA had an announcement of a new bus model for Singapore known as a government contracting model. So we see that the market actually has been anticipating some form of announcement. This is, if you look at the sharp run-up of the share prices for the three PTOs. So this contracting model is not new. ComfortDelGro is already using it in Australia and UK. But what is not known previously and the new information that was announced last week are three things: the ownership of the assets, the bundling of the assets, and the timeline for implementation of this new model. So firstly, the ownership of the assets. Under this new government contracting model, the government will own all operating assets and infrastructure. Operating assets will be like the buses. Infrastructure will be the bus depot and the bus parks. And next is the bundling of the assets. So all the assets relevant to bus operations in Singapore will be bundled into 12 packages, each consisting of 300 to 500 buses each. So it's now no more individual routes but 12 packages. And the timeline is that the bidding for what will happen is that there'll be a bidding for 3 bundles first. The first bundle will be up for tender in the second half of this year, but the operations of the new packages under the new model only begins in the second half of 2016. That's actually in August 2016 when the existing bus service operating licenses come to an end. And as part of this new implementation, the remaining 9 bundles will be retained by the existing PTOs, which are SBS Transit and SMRT. They will be able to keep this 9 package for about 5 years, because that's how long the new contract will last. And then in 2021, these 9 packages will be up for tender as well. This new model obviously is a positive development for the PTOs, because their bus operations have been loss-making the last few financial years, and this would reverse the losses and change this model into a profitable model for them. And later this week, LTA will be announcing further details on this new bus model. Now I move on to SETS. So last week, SETS released its full year results for FY 13-14. Last close on Friday was $3.09. We have downgraded SETS to a neutral rating and a new target price of $3.05. So for the FY, revenue went down almost 2%. To 1.8 billion, while operating profit and net profit both went down 12% and 9% respectively. So what you see is that the decline in operating profit and net profit both outpaced the slight dip in the revenue. The positive thing of their results is that all the operating metrics grew year on year except for the MIL volume. So these operating metrics are such like the flights handled and passengers handled. So we see that there's still growth at Changi Airport, and the food solutions revenue was affected by their loss in the Qantas flights which bypass Singapore, as well as the negative Japanese yen translation arising from their TFK Corp investment that's operating from Japan. In this last FY, the final dividend was 8 cents, up from the previous 6 cents from last year. And this year there's no special dividend, while last year there was a special dividend after they divested Daniels Groups, which is a food business in the UK. So this year the ordinary payout ratio was close to 81%, higher than last year's 66%, and management has guided that they will try to keep the payout ratio at this level in the future. What we see for SETS currently is that they are facing some external and internal headwinds. The external headwinds arises from the aviation sector, which is currently in a down cycle. The aviation sector is where their customers are operating in, and their customers are currently facing overcapacity and lower load factors. In fact, SETS told us that they've even had to lower their prices so that they don't kill their customers. And from within, they are also now facing cost pressures from staff costs. Currently, almost half of their operating expenses is from staff costs. So with these two factors in mind, we have downgraded SETS to a neutral rating and a target price of $3.05 now.
Hi, Carolyn is taken ill today, so I will present for her Global Logistics Properties. PATMI revenue were up 31% and 21% year on year after adjustments to the monetization of the assets to a J-REIT, their J-REIT, and some FX movements. GLP has recorded new and expansion of leases, and it's a record high of 3 million square meters, up 74% year on year. The fund management platform has posted strong growth, with management income doubling to $25 million US for the quarter, and a dividend of 4.5 cents was proposed. GLP has announced that it has hooked up with a Chinese consortium to invest 2.5 billion or 34% of China business operations with a NewCo, China Holdco. Capital recycling plans are in place with 40% increment of development starts in China in FY15. They've also announced to acquire 34 logistics properties in Brazil for 1.36 billion, for next FY, and this will nearly double the Brazilian portfolio to 2.6 million square meters. And the investment will be immediately earnings accretive. Okay, GLP intends to step up the portfolio growth with next year's FY target development starts expenditure of 2.7 billion and an increase of 38% year on year. We continue to be positive on the growth of GLP and upgrade our rating to accumulate as we roll over to our new target price of $3.13. Now we move you on to Lantrovision.
Hi, morning everyone. This is Colin, and today I'll be sharing more on Lantrovision, which we have initiated coverage since last Monday. Right, so when we initiated, the share price then was about 51 cents. So since then, the share price has moved up quite sharply and kind of hit a resistance at around the 58 cents level. So the question then is whether there's any further upside, which I'll be sharing more on this, right? So based on the current share price is right now trading at about historical PX cash about 5.7 times, and on a forward-looking basis about 4.2 times. Market cap is small at about over 150 million, right? So share more on the company background. Lantrovision mainly provides installation, maintenance, and support services for structured cabling systems, and they are also engaged in the distribution of cabling system and the components. So the revenue is really it can be divided into three main segments with installation cabling works, which is taking up the bulk of the revenue at close to 70%, and the second main contributor will be from the maintenance services, which is roughly makes up about 20% of revenue, and then followed by sales of products, which is about 10 to 11%. Right, this company has been incorporated since 1992 and was co-founded by the current chairman and the managing director. And the shares have about more than 50% public float. Right, Lantrovision's client base include mainly global MNC clients, which consists of some of the well-known Fortune 500 finance and technology companies. However, due to competitive and non-disclosure agreements, Lantrovision does not reveal individual customer names. The main operation mainly lies in Asia, with revenue coming mainly from Asia, with Singapore, Malaysia, Hong Kong, and China, which combined constitute about 82% of the last fiscal year revenue, right? So, we'll be sharing more on why is there a need for structured cabling, right? I think the benefits are quite clear. The benefits that structured cabling offers to organization is that it offers a consistency, standardized cabling system, and allows supporting of multi-vendor equipment in the IT infrastructure, right? But I think the great key benefit that structured cabling actually brings to the business is it greatly facilitates moves, adds, and changes of any network equipment, computer servers, right, and so forth, right? Also, another advantage into structured cabling is it simplifies troubleshooting, and hence it really allows quick tracing of faulty cable, and also allows fixes in quick time, right? So the key reasons why a business will want to have a high-end structured cabling system is, firstly, it offers an adaptable infrastructure which can accommodate current and future needs, such that when organization wants to upgrade to move to a faster network speed, for example 100 Mbps to 10 gigabit per second, I think that's where structured cabling really facilitates the changing of the network cables to support a faster network speed. Also, due to facilitating the moves, add, and changes activities, there's a great savings in operational and maintenance costs, and hence resulting in a lower total cost of ownership, right? And The key reason for a high-end structured cabling system is that it allows minimize unscheduled downtime, especially for critical system when if there's a problem that's caused by faulty cables. Okay, they will need the contractor to trace down to the faulty cable and fix it in quick time, right? So these are the key benefits that structured cabling actually brings to the business, right? And Lantrovision is riding on the positive industry outlook with mainly coming from the growth of data centers in Asia. So according to Digital Realty, the key drivers for the growth of data centers growth will be coming from virtualization, big data analytics, data center consolidation, as well as storage growth, right? This is maybe due to the emerging trends in cloud technology and the need for faster speed and storage for digital data. Right. So once again, just to share, there is a client base for Lantrovision consists of global MNCs, bank and financial institutions, IT technology firms, and they also have a client base that's present in the government as well as the electronics and manufacturing sector. Just to share that the Lantrovision management has shared that 50% of its revenue is mainly coming from the banks and the financial institutions. Right. So if you can see the chart on the bottom right, this is mainly the geographical segment in its revenue, where Singapore mainly contributes to close to half of its revenue, and then the another big chunk is coming from Malaysia, Hong Kong, and China. Right. So okay, I think what really sets Lantrovision apart from the rest of its competitors is that Lantrovision has this program that's called the Global Alliance Partners. It's mainly an initiative whereby Lantrovision partner with the world's other leading ICT service providers in structured cabling, network, and data center management solutions. So this not only extends its global coverage to North and South America, Europe, and Australia. There's outside of Asia, but I think the key benefits that the Global Alliance offers is to prospective global MNC clients that there's this option in engaging one single vendor to provide a fully integrated support and maintenance service for their global IT infrastructure rollout. So this greatly appeals to global MNC clients that has need to set up regional office in parts of the world, and they need to have they have a need for assurance in the high quality cabling system as well as the maintenance, right? Otherwise, without this global alliance, they may need to source out for other local and unproven cabling structure providers, right? So the key benefits that the Lantro Global Alliance that offers to the global MNC clients is that it offers a consistent high quality service in the cabling works, as well as a single guaranteed service level of agreement. So, for example, if a bank in the US has a service level agreement of 2 hours, whereby they need the vendor to quickly restore the system within 2 hours from the downtime, then they can expect the same service level agreement in all other of their regional office, as long as they engage the Global Alliance partners in maintaining their IT infrastructure. Right. Also, other benefits that Global Alliance brings to the MNC clients is a consistent global pricing, as a single point of contractual engagement responsibility, as well as a consistent global account governance process. Right, you see on the world map, this is where all the global alliance are located. Lantro Global Alliance is actually started in 2008, and since then they have slowly been adding some of the partners to the Global Alliance, with the latest mainly coming from the European partner as well as the Japanese partner. Right, so. Right, so it really appeals, once again, it really appeals to global organizations that have a need to expand their offices throughout the world. Right, so just to share some of the success stories of Lantrovision, This is Credit Suisse First Boston, which was the name of the investment banking division of Credit Suisse before 2006, before it was rebranded and integrated into Credit Suisse as a whole, right? So I believe that this success story was before 2006, right? So mainly they were setting up the office in Singapore at One Raffles Link, and they engaged Lantrovision to do up the structured cabling system, right, for their office. So some of the challenges that Lantrovision was able to overcome was the minimization of cable congestion, right, and also to ensure that this optimal network performance given the nature of the business, right. So also it's listed that the entire installation took just 3 months to complete. So I think that gives some of the key competitive strengths of Lantrovision over the rest of competitors, that they had high technical skills as well as able to complete the projects faster than any other providers can offer. Right. The next another success story of Lantrovision is that they were engaged to do up the installation of the cabling system for the Changi Airport Terminal 3. So mainly this the system was installed to help handle the extensive baggage facility built to handle the huge passenger volumes, right? So next to the investment merits of Lantrovision, to sum up, Lantrovision boasts a 23 years excellent track record and earning recognition from suppliers, customers. The last recent award was recently awarded by Las Vegas Sands in the Singapore Marina Bay Sands in January 2014. So I guess that really gives a hint on who did the cabling system for the Marina Bay Sands. Right. Lantrovision also boasts a strong management team with each of its executive officers having more than 20 years of experience in the structured cabling industry. Right. The company also has a very strong cash positions and it has no debt at all. Right. Cash roughly makes up about 75% of its net asset. Right. And also, given the nature of this business, there's minimal capex for Lantrovision, right? And based on current share price, the expected dividend yield is about 3.3%. That's assuming if they are continuing to maintain the dividend that was paid out in the last fiscal year of about 2 cents dividend per share, right? So given that the payout is about 54%, I think there's still further room for increasing payout and hence a higher dividend growth, right? So in the fiscal year 2013, this is the first final dividend that was actually paid, that was declared by the management. So I think Lantrovision's management is ready to give back some cash to its shareholders. All right. If you look at the chart on the right, if you notice there was a increase in the earnings per share, but that was mainly due to the share consolidation of 100 shares into one, as the rationale was this is that the Lantrovision shares back then was trading at less than 5 cents, so hence the consolidation to boost the liquidity of the shares, right? Also, they did a rights issue of 12 shares for one, which was to raise some of the financing for some of the working capital, right? So just a summary on the financials. Basically, it just if you see on the diagram, it gives the geographical segment breakdown of this historical revenue. As you can see, the Singapore contribution roughly makes up 50% of its revenue, and other main contributors are from Malaysia, Hong Kong, China. Right. Revenue operating margins, for the operating margins are rather volatile, but somehow in the last 3 fiscal year, this seems to have narrowed down quite a bit. In FY09, FY10, the revenue and margin was greatly impacted due to the global impact from the global financial crisis. But despite lower revenue, Lantrovision was still able to sustain its profits back then. Right. So things that I do want to highlight is that going forward, we've actually forecast the FY15 onwards for this top line and the earnings to be lower, as we think that the FY14 revenue and earnings is kind of exceptional. However, if Lantrovision is able to sustain its revenue and earnings based on the FY14 financial performance, I think there's even at today's price, I think Lantrovision is still undervalued, right, way below its intrinsic value. Right. However, at this point of time, we chose to remain conservative, given the fact that there's little disclosure to the revenue drivers. Right. So, to sum up, I think some of the strengths of Lantrovision is that it offers a great value play, and it has a competitive edge with its Lantro Global Alliance partners. And also it rides on a positive industry outlook. Okay, some of the key risk factors will be due to coming from potential macroeconomic shocks, labor crunch, technology obsolescence, competition, and also volatile earnings. However, in managing the risk, I think the business that in cabling works is resilient, given that whether companies are upsizing or downsizing, there's always a need for changes to their structured cabling systems. Right? So this gives the resilient nature of its business. Also, Lantrovision has a staff turnover that's in a single digits. So in our opinion, this is at a healthy level. And also the management has adopted a very prudent approach in selecting projects to undertake. So they will help to mitigate the labor crunch risk factor, right? Other ways of mitigating the risk is that the company will carry on to stay up to date with current technologies and industry standards, and maintaining a very good relationships with their partners, suppliers, and customers, right? And also maintaining the consistency and track record in providing the high quality products and services. And also Lantrovision is also looking into diversifying the client base, so that will offer some of the diversification benefits. So they're also right now targeting more into the local MNC and SMEs, although that a client base will typically have more competition, right? So in view of all the investment merits and that there's still further value in Lantrovision, we are recommending a trading buy. We have a target price of 68.5 cents. Right. So before I come to the question, the Q&A answers, just want to elaborate slightly more on this business model. Is to show that structured cabling is not just so straightforward. Is that they will need to do some consultation with customers' requirements and their budget consideration as well. And they will need to go to the site to survey and taking down measurements before they design the structured cabling system and start to implement the cabling works, right? Before and once this is done, there will be rigorous testings to ensure that the whole system is compliant with the standards, and to make sure that network performance is optimized according to the customer's requirements before. And once the testing is done successfully, that's where they'll commission and hand over the entire IT infrastructures to the customers. But however, they'll still continue to provide the maintenance and support on an ad hoc basis wherever customers relocate our forces, or there's a change. There's a need for change in the cabling system, such as a faster upgrading of their cables to support faster network speeds. And wherever there's troubleshooting required, that's where they offer their services. Right. And also there's a new product which Lantrovision has partnered with SmartDeck Limited. This is mainly to they're partnering with Defendec to sell and support its perimeter intrusion detection system in Singapore, Indonesia, Philippines, and Myanmar. So this system offers a low maintenance cost as it deploys a wireless technology. So believe this product greatly appeals to government, military, and companies that requires a high security and perimeter defense. So, of course, we are discounting that there's any growth contribution from this product, as it's still relatively new at this point. Right. So, I think right now we are at the question and answers. Okay, there is a question asking on who are Lantrovision's major competitors. Okay, I think in this industry, there's various small private limited companies that can actually offer the similar service. However, as I mentioned, the competitive edge that Lantrovision has over the rest of its competitors is Lantro Global Alliance Partners, which definitely appeals to global MNCs. So this actually allows Lantrovision to bid for global contracts, right, which other competitors may not be able to match up in terms of the service level agreement, as well as other benefits that the Lantro Global Alliance can actually offer, right. Some other known competitors, especially in government projects, would be NCS, which is a subsidiary of Singtel. So they do actually provide substructure cabling services. But as I've known from the industry checks, in this Lantrovision is well known in this industry locally, and hence they are able to get many of the global MNCs, which consists of financial banks and financial institutions, to get Lantrovision to support their cabling systems. Right. There's a question asking whether due to the fact that majority of the projects are piecemeal contracts, and whether they also offer time and material contracts. Right. As I've said, one of the thing about Lantrovision is that there's minimal disclosure to their revenue drivers. So hence, I think that's where the market actually some discounts some of their forward earnings going forward, right? It's so similar to the payment schedules and credit terms. Unfortunately, they do not share such details.
Hi, morning. So there is a question about why Midas is lagging, even though it has 1 billion of contracts. Okay. Yes, we agree. Okay, here's our stand, because even though we don't cover Midas, but this is what I've read so far. Midas, even though it has won a lot of contracts, right? Most of these contracts actually goes to its 32% owned Nanjing subsidiary. Okay, and the thing is that if you had looked through the past 4-year financials, so you do an annual reports from 2010 to 2013, actually its balance sheet is pretty weak.
its receivables are growing. It's also requiring more and more reliant on short-term working capital on these bank loans. So we don't think that we don't think that the profitability will really show up, even though it's been winning a lot of contracts. Yeah, and just to be careful because the balance sheet is, I mean, if there is another liquidity scare in China, then Midas might have all these credit lines being pulled off it, and it might not be able to refinance or get any funding in the short term. Thank you. Okay, some audiences say there's too soft and cannot hear me. Okay, so again, currently our house, we don't cover Midas, but this is my personal take on Midas. So yes, it's won a lot of contracts, but most of this goes to its 32% owned Nanjing subsidiary. At the same time, if you look at its 4-year financials from 2010 to 2013, its balance sheet is very weak. It's increasingly reliant on short-term financing. Okay, so if you look at this, current liabilities has increased by more than 4 times, even though the revenue has roughly been the same. So in short, if there is another liquidity scare in China, it might have its credit lines put on it, and Midas might not be able to find any short-term funding to replace in the quick time. Thanks.
Right. Question on U.S. markets, the outlook. Kenneth is not around today, but he gave an update over the weekend on his take. Yes, he's actually sticking to his view that although we may have a short-term cycle high, it's a move that is not quite corroborated by small caps. It's not quite corroborated by breadth in the market, and basically there is risk that if it stalls, then basically we may have put in a short-term double top, and so that implies that it could actually fall. Having said that, this neutral view on the US is set against a backdrop of what we think is still a bull market, and we are still long-term bulls in the US and in Asia, and we view any pullback to be not very significant, probably 10% at most, and any pullbacks would be an opportunity to buy quality stocks.
Hi, there's a question on when was Lantrovision's AGM and when they paid their dividends. As their financial year, Lantrovision's financial year is in June, and the AGM is typically held in October, right? So the final dividends also was paid out in October as well, right? Profit margins on what's the profit margin that Lantrovision is getting. So if you can look at the financials, roughly the operating and the net margins is for operating margin is roughly close about is about 10% based on the last 3 fiscal year. However, FY14 it will be much exceptional as given to the strong increase in revenue and the improvement in margin. So net margin is slightly lower at between about 6 to 9%, right? Question on whether Lantrovision have any future plans to expand their other global revenue drivers. As I would say that Lantrovision with business will still be focusing in Asia, and given that in other parts of the world they have their global alliance to partners to to capture the contracts from other global MNCs. So I think this revenue contribution from those other parts will remain small, right? So I think as to where they can actually grow is mainly due to mainly coming from Asia, right? However, the challenge then is mainly due to the labor crunch, as given the nature of the business, it's very labor intensive, so we do not really expect a very strong growth in that aspect.
There's a question on whether recent tensions between China and Japan might escalate to war, into war, as addressed to us. Well, this is a hard one. Honestly, I have no idea. And I think most people have also very little idea of whether it will escalate into war. Obviously in this day and age, it seems unlikely as the costs to war are great. However, we have seen that countries still make calculated bets, right, on whether whether aggression will yield more benefit or cost. I think from the Crimean situation, you can clearly see that Putin made the move because he calculated that it would cost Russia very little. In this context of China and Japan and the whole South China Sea incident between China and ASEAN, it is worrying as China is getting more aggressive. However, the trade links between all our nations are very strong, and the militaries are not under-equipped on all sides, unlike Russia and Ukraine, where Ukraine's armed forces was clearly in the decline, and Russia knew that situation. This is not really the case in Asia, where everybody has been spending more. Okay, so my hope is that rationality will prevail, because I think the cost will be much greater than whatever benefits that may occur to any side. Thanks.
Yep. Hi. There is a question on what is our view on OUE Hospitality REIT, and the comment is that it is still at the IPO price, as to whether we feel we're kind of neutral on it, largely because after the IPO, we still have not seen, or actually the market have not really seen any asset movement. We do not see any injection of new assets into the REIT. It is the fundamentals has largely remained unchanged. So I don't see any impactors or growth any reason for the share price to actually have any strong upside. Having said that, there is also no downside, because the distribution is stable. The dividend yield is kind of in line with the broad market. So yeah, I do believe that the market is still waiting for the parent group to inject further assets into the REIT before we actually can see what's their growth profile like. So yep, we are kind of neutral on it. I wouldn't really say that I have any strong view upwards or downwards, but yeah, we do have we're leaning more to the favorable side for OUH REIT due to its strong stability in their dividend. So it's good if you're hunting for such yield plays, but we do not expect strong upside in terms of the share price movement. Hope that answers your question.
Hi, question on Bousted. Has it lost its share price momentum? Well, I think any strong run-ups need to be digested, and I think it's in a digestive phase. As you will know, if you looked at the price, it's outperformed probably 2 years to 3 years already. And from a fundamental point of view, I still feel that it's undervalued, right? Principally because that given the value of its industrial portfolio right now and the amount of cash on the balance sheet, severely undervalues the underlying businesses at between 5 and 6 times PE. Okay, the industrial portfolio and cash take up maybe 60-70% of the market cap right now, and so I feel that that there is potential for Bousted to move higher, and I'm sticking with my buy call. And the results are tonight, so I hope that it will continue to meet or exceed my expectations. And I'll update you guys soon on Bousted. Thanks.
Yes, it's me again, Lucas, covering the property sector. The question here is, what is the time frame for Croatia's trust? I believe it's Croatia's Radio Trust, CRT, and Amara to hit their target price. In general, we have a 12-month time frame, or 12-month horizon, in which we believe that the share price will actually move towards our target price. But having said that, okay, we always looking at the intrinsic value, the current worth of the company, as in we believe that there will be further developments even within these 12 months, and the 12-month time frame is only accurate if, let's say, the company did not embark on further engagement in more assets or more business lines. So having said that, for Croatia's trust is something under my coverage. We do hear, as in the report itself, I do believe that I made mention that they actually are looking at the last remaining 2 properties to be they are looking to acquire the last remaining 2 properties, and having spoken with the management in the most recent results, okay, the management has also said that they have went forth and to look at even greater amount other property deals. So while the time frame right here is just basically 12 months, but to shed more light on the stocks, okay, they are actually looking at more growth. So we do believe that there's even stronger upside going forward, and I believe that in the upcoming full year results and also the annual report that's coming out for when we conclude our full year, we will see even greater upsides. So yep, hope that answers your question, and also share you more information on Croatia's trust. For Amara, my colleague Caroline is not around. Once again, just to answer your question, is we have a 12-month forward-looking 12 months time frame, and yep, that's about it for the question. All right. Thank you. So, is this all? So sorry, I think there's some question on Tat Hong. We do not have any coverage on Tat Hong at this point in time, so we are unable to really comment on that. Yeah. All right. If there's any further questions, do email to our research. Just drop us an email at research@philip.com.sg if there's any further questions. Alright, so I believe this is all for this week. Do tune in to our webinar next week. Thank you.